Hi everybody and welcome to this week's Markets to Watch from Smack the Markets for Monday the 9th of July. Last week we had quite a challenging week in the markets. There was quite a bit of news and quite a bit of suspense as well with regards to non-farm payrolls, US holidays and also pending trade news as well with the US trade tariffs coming into force on Friday. So from that perspective, made it a little bit of a challenging week, but in the trading room, we still managed to cut out around sort of 3%, which was sort of quite nice with a few little winning trades there earlier on in the week. So taking a look at what to focus on this week. Now, there's a few things going on. Of course, we've still got big macroeconomic things going on in the markets. What with the trade, pretending sort of trade tensions between the US and China still going on, but also potentially one to watch is the UK, especially with the Brexit Secretary, Mr. David Davis, recently resigning. So let's have a look at a handful of markets here for some potential sort of opportunities and the best ones that I'm liking. Now at the moment here we're in an environment where we've got a weakening US dollar, so that dollar is declining at the moment. It started at the tail end of last week on the back of the US the US trade tariffs coming into force, and that's started to give a bit of a lift here to some of the dollars trading pairs, so namely the sort of euro and namely sort of like the Great British Pound. Now Great British Pound is the one that I'm sort of favouring at the moment, mainly because it as we can see here on the weekly chart, you know, it's come down quite a bit. It's sort of found support here at 132, and you know, even if we could start to get a retracement up for perhaps to put in a lower high within the context of this downtrend, even if it was going to put in a lower high, that still means that there's room for a decent retracement long. If we come down the time frames, you can see here on the daily chart that the markets had a very sort of positive open this morning, and now the market is above 133, which has been a key level on this market. So if we just zoom out of this slightly, you can see that 133 has been sort of quite a significant level, and sterling is above that at the moment. So last night, when the markets opened the beginning of this week, it gapped up. It's now sort of pulled down, closed the gap, and now it's rallying higher. So I'm liking cable here above 133 because I think it's looking sort of strong there, and it's sort of kind of proving itself as long as it stays above that level. As far as sort of targets are concerned, where could the market go? Well, I start to look here for additional sort of support and resistance structures, and you know, if we start to look here on the daily chart, I think sort of 130, 134, 135 up here. There's sort of area up here of previous support and resistance, and that looks like a nice sort of structure point for the next sort of area for the market to test. Now, of course, a lot of this is as with all market, it's going to be all market moves. It's going to be sort of dependent on the fundamentals supporting the move. At the moment, we've got dollar weakness, which is supportive, but of course we have got quite a bit of political news going on and political things going on within UK government. So just keep an eye on that. As far as trading opportunities are concerned, the trading opportunities really for this market are going to be on the intraday time frame. So come down to the likes here of the 4-hour chart. We're getting some strong moves now above 133. Come down even lower, and we can start to see that, you know, even on the sort of 60-minute chart here, we've got some very nice moves here, strong moves to the long side. So again, Great British Pound against the US dollar above 133 is something that I'm keeping a close eye on. If we come and have a look at US indices, US indices at the moment, my favorite one is the Nasdaq. and the reason for the Nasdaq is because it looks the strongest out of all three, namely the sort of Dow Jones and the S&P. So here the monthly is extremely strong, as we can see, the weekly being extremely strong, and it's just sort of pulled back into the moving averages. And now this week we're breaking out of the high from a bullish week last week, when the market came back into that sort of popular area where it often finds support. Even if we look at the general sort of structure here, the recent trend here on the Nasdaq, we can see that we've got higher highs and higher lows. So for this to continue, we're going to be expecting a higher high here, and that's still looking extremely bullish. Trading opportunities are certainly going to be more on the sort of intraday timeframes. On the 4-hour chart here, we can see that the market's now clearly put in a base at 7,000. That sort of base now has been sort of tested, it's proven support, and now we've got a break to the long side. So trend structures now starting to form intraday on the sort of Nasdaq long. As far as commodities are concerned, one of the big moves that we've had recently, which has gone maybe it's not been sort of picked up by all traders, has been here on copper. Copper has had a huge move recently, and it's really sold off, as we can see over the sort of past sort of 3 or 4 weeks here. Sold off extremely sort of heavy, and now the market sort of like bounced, it sort of found support just above this sort of 2800 level, which has been sort of quite a significant level here on the weekly. Now, because of the strength here, the market's sort of fallen so hard, and it's sort of had such a good run and being overextended. Again, we've had that little bit of a bounce. I'm just sort of looking for opportunities as to where this may retrace to and where it may roll over. If we come down a little bit lower and start to come down to the daily time frame, we can see on the daily the strength of this move. We've now got a rejection of the low here, and we've got a bit of strength coming back in, but this has been so incredibly weak. I don't think it's going to have, it would be nice to sort of see it come back up into these higher levels up here, around sort of 3,000, but it doesn't at this moment in time look as strong enough to be able to get up there. So if we come down the time frames a little bit, we can start to see on the 8-hour chart here, looking rather interesting, that if we come to the zoom this up, we can see that the market has been put in a very good trend structure whilst it's been sort of moving down on the 8-hour chart. Every time it's sort of come back into the moving averages, it's found new momentum, and the next leg of the trend has continued. At the moment, the market has just pulled back into the same area, back into the moving averages, and we started to get some bearish momentum again. So this looks like it could be an area where the market may find resistance, and we could start to get opportunities to the short side. If we come down to the lower time frame again and come down to the 4-hour time frame, and if I just mark a level in above price action, we can see that there's certainly been a shelf here of resistance that the market sort of found in the past. Now the market's back up to that level, and it's just sort of finding resistance at the same price point. So I think we've got a key decision point here. If the market can stay below this level at sort of 28.75, then I think I think it's going to be sort of weak, and we could see a retest towards the lows and sort of trading opportunities to the short side. If it breaks above this level, then I think we're going to get some bullish momentum, and we're going to get a sort of a deeper pullback. But I just think we've got at this moment in time, we've got some opportunities there, sort of potentially a line in the sand that we could sort of look for short opportunities with stops above the high. So there's a few markets there that I'm keeping a close eye on for opportunities throughout the course of this week. Certainly look forward to speaking to you next time. Keep checking back for revisions on the website as the week goes on. Bye for now.